Exploring the history of major tax reforms reveals a rich tapestry of pivotal moments that have shaped economies and societies. These reforms are not just changes to tax codes. They reflect nations' efforts to balance justice, fuel economic growth, and meet evolving needs. One notable example is the U.S. Tax Reform Act of 1986, which simplified the tax system, broadened the base, and cut rates. A landmark bipartisan effort, it demonstrated the potential of lowering rates to spur growth, but highlighted the ongoing challenge of preventing loopholes. In Europe, the introduction of the value-added tax, VAT, in the UK in the 1970s replaced older taxes with a more efficient consumption-based system. While VAT generates significant revenue, it raises concerns about its regressive impact on lower-income households, emphasizing the need for exemptions on essential goods. Corporate taxation has also seen international reform, notably through the OECD's Base Erosion and Profit Shifting (BEPS) project. BEPS tackles the challenges of taxing multinational corporations by realigning taxation with economic substance. It highlights the complexities of global tax cooperation, especially in the digital economy. Tax policy is a dynamic field where ideologies, economic theories, and societal values shape both national and global financial landscapes. The ongoing debates and emerging trends highlight the complexities of balancing fairness, equity, and economic efficiency, while navigating the challenges and opportunities that lie ahead. One major debate centers around the progressivity of tax systems. Advocates argue that progressive taxes help reduce income inequality, placing a higher burden on the wealthy to promote fairness. Critics, however, caution that high marginal tax rates may discourage investment and hinder economic growth. An alternative gaining traction is wealth taxation. Proponents see it as a way to address economic inequality by redistributing wealth, while opponents worry about capital flight and the challenges of administering such taxes. Environmental taxation is also rising in prominence, with carbon taxes and levies on pollutants playing key roles in the fight against climate change. These taxes face concerns about regressive effects on low-income households and the need for international coordination. The digital economy presents another frontier for tax policy. Traditional tax frameworks are being challenged by the rise of digital giants that profit in countries without a physical presence. Proposals for digital services taxes aim to ensure these companies pay taxes where value is created, though the issue remains controversial. Technological advancements like big data and artificial intelligence offer new ways to enhance tax compliance and reduce evasion. They also raise concerns about privacy and data security. Global challenges such as demographic shifts, migration, and the future of work will influence the direction of tax policy, requiring systems that promote inclusivity and resilience. As we stand at the threshold of a new era, the future of taxation unfolds like an intricate map, shaped by the forces of technology, globalization, and evolving economic models. This future presents both promise and challenge, urging us to rethink traditional structures and explore new pathways. In the realm of technology, innovations like blockchain and artificial intelligence, AI, are poised to revolutionize tax administration. Blockchain's transparency and security could streamline tax collection, reducing fraud and compliance costs. AI and machine learning offer powerful tools for analyzing data, predicting revenue trends, and personalizing tax services. These technologies promise to simplify tax filing and enhance law enforcement with unprecedented accuracy. Globalization, meanwhile, continues to challenge traditional tax systems, as businesses operate across borders and the digital economy allows companies to generate profits without a physical presence. This has sparked efforts to update international tax rules to better reflect where economic value is created. Proposals for a global minimum tax, aimed at preventing a race to the bottom in corporate tax rates, seek to ensure that multinational corporations pay their fair share, regardless of their location. Environmental concerns are also driving the rise of green taxes, such as those on carbon emissions and plastic use, designed to encourage sustainable practices. These taxes align fiscal policy with the need to combat climate change, offering a way to internalize the environmental costs of economic activity. international cooperation will be essential. Economic activities transcend borders, making coordinated efforts and adherence to global standards crucial. This journey toward the future of taxation demands a balance between innovation and fairness, requiring ongoing dialogue and adaptability from policymakers, businesses, and citizens. The future of taxation promises greater efficiency, fairness, and sustainability, but will also require creativity and collaboration to navigate the challenges. Success will depend on our ability to embrace change, envision new possibilities, and create a tax system that serves the needs of an interconnected world. The intersection of taxation and environmental policy presents a crucial opportunity to align economic systems with sustainability goals. Carbon taxes, which charge fees based on carbon emissions, offer a clear mechanism to incentivize cleaner energy and innovation in green technologies. By turning pollution into a financial cost, they encourage shifts toward sustainable practices. Beyond carbon taxes, levies on single-use plastics, urban congestion, and other pollutants embody the polluter pays principle. These taxes not only generate revenue for environmental initiatives, but also promote responsible consumption and industry behavior. Challenges like the potential burden on lower-income households and the competitiveness of businesses must be addressed through careful tax design, including rebates or exemptions for vulnerable groups. Global cooperation is essential, as unilateral actions may drive polluters to less regulated areas. The future of environmental taxation is likely to expand, driven by technological innovations such as dynamic tax rates and transparent tracking through blockchain. These advancements can refine how taxes are implemented, increasing their efficiency and impact. Behavioral economics reveals that decisions are shaped by cognitive biases, emotions, and social norms. These insights are crucial for designing effective tax policies that encourage compliance and trust. Real-world behaviors like procrastination, underreporting, or overpayment of taxes stem from more than rational calculations. Policymakers can use behavioral nudges, such as pre-filled tax forms and simplifying procedures, to reduce errors, lower the cognitive burden, and encourage voluntary compliance. Social norms also play a significant role. Studies show that informing taxpayers of high compliance rates within their community can significantly boost their own adherence. Framing is another powerful tool. The way tax incentives or penalties are presented, whether as a loss or a gain, affects taxpayer perception and behavior. Behavioral economics shows that presenting tax deductions as rewards can be more effective than simply reducing the amount owed. Integrating behavioral strategies into tax policy presents challenges, including concerns about manipulation and the need to balance influencing behavior while respecting individual autonomy. The fusion of behavioral economics with tax policy signals a shift towards systems that are not only efficient, but also sensitive to human behavior, paving the way for policies that build trust and strengthen the social contract between governments and citizens.